coming today. I do think that we've put in a lot of work and effort that doesn't always get communicated to our shareholders, so appreciate the opportunity for everybody to come and sort of listen to our plan and kind of get a good idea of where we're going over the course of the next year or so. Also, I want to thank our team, the Southern Concepts Restaurant Group team. Obviously Heather and Sean as our officers, and then Gary obviously as a co-founder of the company and everything that he does, to help us achieve sort of the plans that we put into place. Obviously Kevin, Brandy, and Lexi also are sort of the miracle workers. Warren Buffett calls his team the miracle workers, and I never quite understood what that meant until you actually get in a position where you need to lean on people who have skills that you have no clue about, don't know the first thing about. And so those guys pump out some amazing work, and a lot of the graphics and things that you'll be seeing today are a direct result of their hard work. So taking a look back at 2014 was a very interesting year for us. Obviously, we grew sales, and at the end of the year, we grew sales by 145%, which is a fairly large number, and it's the type of growth that we're expecting over the course of the next 2 or 3 years. We've got an opportunity as a young restaurant group in a very scalable industry to continue to grow sales by opening new units. And the growth in 2014 was obviously primarily contributed by Bourbon Brothers Southern Kitchen, which you can see opened in January of 2014. On a year-over-year basis, in 2013, consolidated revenue for what is today Southern Concepts Restaurant Group was $2,099,000, whereas in 2014, we grew that number substantially and closed the year with $5,144,000 in sales. So spectacular growth, and that growth does not come easy. It doesn't come without challenges. We have continued to work at refining our company, refining our brand, and all the way down to the store level management. We focus on that every day and being able to provide the best product at a very reasonable rate possible. We grew in June by 100, through the first 2 quarters of the year, we grew sales by 180%. And again, that's primarily contributed to the opening of Bourbon Brothers Southern Kitchen, January 27, 2014. The genesis of our growth for the year, though, really took place, I believe, in July of 2014 when we signed a lease and committed to opening our 3rd store in Lone Tree, Colorado. And that's something that we're very excited about. The new store is going to be a Southern hospitality restaurant and bar, exactly like the restaurant that we have in downtown Denver, as well as the store that's in Colorado Springs, from whom we're licensing the brand. So that store is set to open April 15th. We've been working very diligently at getting that store and that building more or less renovated and ready to begin generating revenue for us. November of 2014, we brought on 2 new directors, and there are 2 directors that I couldn't be more proud of. I think that they each bring a unique skill set to our business. The first of which is Brent Wood. Brent is a managing partner at the Larry H. Miller car dealership franchise, and he's a partner in over 20 dealerships around the country. He's got a lot of experience in sales and marketing. If you know anything about sort of the business of selling cars, or anybody who's in that business, it's all about sales, it's all about marketing, and Brent has really brought a lot of very productive steps and ideas to our board in how we can further market our business, sell our product, and do so on a consistent basis. The second board member that we brought on during our November election was Rob Cohen. Rob Cohen is the chairman and CEO of IMA Financial. IMA is one of the largest commercial insurance brokerages in America. It's also one of the fastest growing insurance brokerages in America. Rob has brought a lot of corporate finance acumen to our board. He's growing IMA right now through a series of acquisitions, and he's been very instrumental in guiding us through the process of growing this business. He's also on the board of the USOC in Colorado Springs, so he's very familiar with this market. He's got a very large network of very influential people, as he's also a managing partner in Iron Gate Capital, which is a private equity firm located in Boulder. And then finally, and maybe most importantly, in December of this past year, we signed an agreement with the licensor of Southern Hospitality, our partner in the brand, to grow out a fast casual concept of Southern hospitality. Fast casual is something that I'll talk a lot more about as I go through this presentation, and that's something that I think is ultimately, we'll look back at 2014 and recognize that master licensing agreement as the catalyst that allowed us to grow from where we're at today to upwards of 75 or 85 cents by the end of the year, potentially $1. So what's in store for 2015? Obviously, you might have noticed on the initial slide there was no mention of Bourbon Brothers. During this year, we're going to be transitioning Bourbon Brothers Southern Kitchen as well as Bourbon Brothers Holding Corporation into newly branded entities. To begin with Bourbon Brothers Holding Corporation, as we're planning and strategizing about how we're going to grow the Southern hospitality concept with the new master licensing agreement that we have in place, as well as amendments to our franchise agreement for full-service restaurants, we think that it's advantageous for us to take this time in our early years to more closely identify who we are as a holding company. So Bourbon Brothers Southern Kitchen, in terms of unit growth, is not part of our projected plan, and so we've decided to take an opportunity to rebrand our holding company into something that's more in line with what our unit growth will reflect, which is Southern Hospitality. So with that being said, there are going to be 3 separate iterations of Southern Hospitality. The first of which is Southern Hospitality Restaurant and Bar, the concept that we have in downtown Denver, as well as the concept that will open April 15th in Lone Tree, Colorado, in Quebec, and C470. The second one is Southern Hospitality Southern Kitchen. You guys are all obviously familiar probably with Bourbon Brothers Southern Kitchen, our concept in Northgate, Colorado, and that concept is also going to be rebranded to become a Southern Hospitality and more closely focus our brand holdings into exclusively Southern Hospitality Holdings. The final concept that we're going to be rolling out this year is Southern Hospitality, our fast casual concept. So Southern Hospitality is at its meat or at its bones or at its core a barbecue restaurant. And we feel like there's a tremendous opportunity for us to grow our holdings into the fast casual space, which is the fastest growing segment of the restaurant industry. It's been the fastest growing segment in unit growth, sales, and traffic for each of the last 5 years. So we feel that we ultimately have a great opportunity to grow our holdings into the fast casual space and leverage a brand that we've already created awareness around to enter into that market with some momentum and great enthusiasm. So I'll start off here with Southern Hospitality Southern Kitchen. This is a rendering of our building at Bass Pro Shops. And you can see the very slight modification that's been made to take it and transform it from a Bourbon Brothers Southern Kitchen into a Southern Hospitality Southern Kitchen. What this rendering does not show is the new smoker that we have installed at the restaurant. The smoker is identical in make and model to the smoker that we have at Southern Hospitality downtown, as well as the smoker that we're going to have at Southern Hospitality Lone Tree and each of the fast casual stores that we roll out this year. We think that focusing more on smoked meats will give us a stronger niche and a stronger position in that industry, something that makes us a little bit more identifiable up in northern Colorado Springs. It focuses our brand alignment. People will recognize that Southern Hospitality Southern Concepts as a holding company exclusively owns the Southern Hospitalities in Colorado, to include Southern Hospitality in downtown Denver, as well as Southern Hospitality in Lone Tree. And this is simply a third iteration of Southern Hospitality that will be exclusive to northern Colorado, or northern Colorado Springs. Not dissimilar to the Papa's restaurants. If you're familiar with Houston, Texas, kind of the South Texas area, there's a handful of different Papa's restaurants, whether it's Papa's Burgers, Papa Do's, Papa's BBQ. So that's something that I think will also make us a little bit more of an inclusive brand. Bourbon in the name, sometimes we've gotten a little bit of feedback from our consumers that having bourbon in the name might neglect certain demographics to include, no offense, but the ultra-conservative sort of demographic that we're dealing with in northern Colorado Springs, as well as some of the families. So with the resort coming in and having a very family-focused atmosphere at the resort and water park, we felt like it would be advantageous for us to transition into a Southern hospitality, Southern kitchen concept. In terms of additional full-service growth this year, Lone Tree, Colorado will open April 15th. I built this little badge last night to show everybody. And the brick building there is actually the building that we're going to be occupying at 470 in Quebec. 470 in Quebec is a very interesting area for us. It's got a permanent population of over 200,000 people within 5 miles of the restaurant, and a daytime population of over 300,000 people within 5 miles of the restaurant. And that daytime population growth, as far as I'm concerned, is primarily due to the Denver Tech Center. And the Denver Tech Center is a very, very dense, concentrated population of office. And really east of I-25, if you're familiar with that area, there are very few, almost no restaurant options for lunch or happy hour or for dinner for that daytime population. So we feel that we've strategically located ourselves in an area that will allow us to be very competitive for AM or lunch day part sales. Park Meadows is probably your best option right now for concept style restaurants in the Lone Tree, sort of Highlands Ranch, Denver Tech Center area. But we've had a lot of feedback. We've done a lot of research on the amount of time it takes to, get into Park Meadows, park, walk to a restaurant, eat, walk back to your car, get back out on the traffic on Quebec. And we feel that we've alleviated a lot of those concerns for consumers as you never have to get on County Line Road in order to get to our restaurant. You can get on 470 or take Park Meadows Drive. So during the day part, we feel very confident that we're going to do excessive volumes out of that restaurant. And then also for the PM, we're right next to and adjacent to It's Brothers, which is a restaurant bar concept in Lone Tree as well with shared parking. They're a very high volume restaurant. They've been there for 5 years. They consistently have a wait, and so we feel that we're coming in with a differentiated food product as well as a differentiated bar product that's a little bit more mature in my opinion, and will allow us to be very competitive for PM day part sales there. Downtown Colorado Springs is the picture in the bottom right-hand corner. It's an area that we've identified as a very viable and potential demographic or geography for growth this year as well. We're actually currently negotiating a space in downtown Colorado Springs that we would likely build a Southern hospitality restaurant and bar which would give us 3 full-service Southern hospitality restaurant and bar restaurants in Colorado, with one being downtown Denver, the next being in Lone Tree, and the third one being in downtown Colorado Springs, in addition to obviously our full-service Southern hospitality, Southern kitchen on the north end of town. So downtown Colorado Springs is a very growing area. There are 250,000 people within the specific space that we've identified on a permanent population basis, and that grows to about 290,000 during the daytime. So also very, very interesting space where I think that below market rents are achievable, and that's something that we're very interested in right now, and potentially growing into the downtown space. Or the downtown demographic as it continues to grow before really too much competition gets involved. So what's happening in the industry? Obviously, if you're like me, you probably read Nation's Restaurant News every morning and follow a lot of the growth and the trends for restaurant holding companies. And if you do so, you'll notice sort of a common theme threaded throughout a lot of larger, full-service restaurant companies. And that's a migration towards fast casual restaurants. There are a handful of full-service restaurant concepts that this year will roll out their first fast casual concept, to include Cracker Barrel, Who Hot, which is a Mongolian grill and sort of restaurant. They're going to roll out a fast casual concept called New Hot, so that'll be interesting to see how they do. But ultimately the idea is that fast casual restaurants are more scalable than full service restaurants. They generate a higher return on equity as well as a higher return on capital, and they reduce the operational complexity of running a restaurant. So in a full service restaurant there are 50 million moving parts. And that's a slight exaggeration, but if you were to translate that into a fast casual model, you move down to about 50,000 moving parts. It's got a much more limited menu. It's got a more easy to prepare menu, and generally you're working with 8 or 9 employees at the store level rather than 45 or 50 in a full service restaurant. So, that's something that for us allows us to grow more quickly. You're also, generally building out 2,000, 2,200, 2,500 square foot inline end caps, where there's typically more developer PI available. It's generally a little bit of a cleaner lease in terms of cams and other things. It's much more of a community development. So that's one of the primary reasons why fast casual is growing. But I think even more importantly, or more of a greater reason why fast casual continues to grow is the alignment with the tastes and preferences of sort of a younger millennial generation. Millennials are driving buying power right now at fast casual restaurants, and 49% of all fast casual sales are females ages 24 to 39 years old. There's sort of a movement in fast casual where you're trying to identify a restaurant that has the highest quality food, that's prepared freshly, but is also convenient and quick and easy. So that sort of eliminates both, the traditional quick service restaurants, because the food, as everybody knows, is not healthy, it's not fresh. Quick service restaurants are really struggling right now trying to attract millennials, and you can see that with a lot of the changes that are being made at McDonald's or at Taco Bell. While all of those sales continue to flood into fast casual companies like Chipotle, Smashburger, Shake Shack, Noodles & Company, Panera, the list sort of goes on and on. So for us, we feel that it's the most scalable format of a restaurant that we can grow into, and we also think that we're riding a tidal wave in that consumer tastes and preferences are evolving and more closely resemble the product that fast casual delivers. Here's a quote from Nation's Restaurant News. Mark Brandow is an editor there, and he wrote, for the 5th consecutive year, the fast casual segment's growth in traffic far surpassed that of every other restaurant segment in the 12-month period ended in November 2013, according to new research from the NPD Group. You can see this graphic, which I took from that article, shows traffic change, traffic growth change in the restaurant industry by segment. And you can see that fast casual, relative to casual dining or traditional quick service, is far outpacing each of those other segments. Of course, this is from 2013, and I think that the 2014 number will be even more dramatic, as we saw a loss or a slip in sales at companies like McDonald's, who are, in my estimation, probably going to go from 0 to somewhere less than 0 in terms of traffic growth as millennials continue to shift to fast casual restaurant groups. It's also interesting to note here that with the exception of fine dining, and I think that there are a lot of macroeconomic reasons that fine dining was up, all other restaurant industry or segments were down, right? Restaurants lost a lot of steam in 2013, and during that period of time, fast casual grew by 8%. So that's something that's very interesting to note there. So full service migration to fast casual. A lot of people ask me sometimes, people who, a lot of you guys, a lot of shareholders have asked me, so what is the name of the fast casual Southern Hospitality going to be? Is it like Southern Hospitality Express, or is it, Southern Hospitality Quick and Easy? And the answer is no. The answer is we're going to brand it Southern Hospitality, which is something that I've watched very closely as Chipotle came in and invested very heavily in a company called Pizzeria Locale. Pizzeria Locale is a full-service pizza restaurant concept in Boulder, Colorado. It was a one-unit deal, and it was a very popular full-service pizza restaurant where you would come in, you'd order a large pizza for the table, you might get a bottle of wine, you have full wait service, as well as full bar service. And Chipotle invested in that company for a couple of reasons. They have a very high standard of product. They have a very high standard of ingredient quality. They're using the freshest ingredients from local sources, and they're providing, a sort of very premier offering in the casual pizza space. And so Pizzeria, or Chipotle more or less, didn't want to discount that quality that allowed Pizzeria Locale to become a leader in the full-service pizza space. So when they began to roll out fast casual prototypes, if you will, of pizzeria locale, they did so with the same logo, the same branding, the same name that the full-service restaurant maintained up in Boulder, as to communicate to the consumer that it's not a step down in quality or a step down in experience. It's simply a different format, and it's a different style and a different, different functionality within the restaurant that allowed you to take the same quality product and gain better access to it in a more convenient way. So that's something that we want to do with Southern Hospitality. The Southern Hospitality fast casual concept is most likely going to open at 1000 South Colorado Boulevard in July. The renderings that you're seeing are our initial plans for our kitchen and sort of represents the functionality of how this restaurant will work. You'll begin at sort of the top right of this diagram, and you'll enter into the restaurant, and if you're moving from right to left, you'll be greeted by a large glass case that's going to be our cold storage and meat prep area. It's very important that we translate and communicate with the consumer the freshness and the quality of our meats. So we're going to be, prepping all of our raw meat in front of them in a very cool glass enclosure that's being designed by Roth Shepherd Architecture, which is the architecture firm that rolled out Tokyo Joe's, as well as Mod Market, two of maybe the most successful Colorado-based fast casual restaurants in the last 10 years. So you'll be greeted by the glass case, and as you move down the line, you're going to have an option to choose your meat or choose your protein, okay? So very similar to what you might see at Chipotle, there will be a menu board where you're going to make your initial selection of protein. So if you're interested in St. Louis ribs, spare ribs, hot link, pulled pork, brisket, chicken or tofu, or turkey, you'll make that selection known to the person behind the line, and they're then going to ask you how you would like that protein plated. Would you like it on a salad? Would you like it on a sandwich? Or would you like it plated naked, which is by itself? Once you decide how you would like your proteins plated, you're going to move to the cold garnishments. The cold garnishments are not an extra charge, but it would be more like if you were at Chipotle and they ask you if you want what kind of beans, what kind of rice, what kind of salsa, and so on and so forth. So you'll choose from any of the typical barbecue cold garnishments like pickles and onions. Sean and Jeff Giobot from Southern Hospitality in Denver are currently working on our barbecue pico and some other very interesting cold garnishments that we're going to have that you could top your salad with, or if you have a naked plate, or even if you wanted it on your sandwich, that would be an option as well. You'll move to the sauces and dressings. So let's say that you got a salad, you're going to have an opportunity now to choose if you want ranch, barbecue ranch, balsamic, or raspberry vinaigrette, which is really a very southern dressing that goes very well and very nicely with any of our salads. Also, you'll have the opportunity to add barbecue sauce. All of our meats are going to be dry rubbed and served dry, and that's in an effort to be more engaging with certain folks who have dietary restrictions like gluten-free, or if they're just trying to stay away from the sauces, then they'll have an opportunity to do so and move to the sides. Right now we've got our sides set at $3, which is inclusive of the red beans and rice, the creamed corn, the baked beans with burnt ends, and the collard greens. We're also sort of testing potato salad and seeing how that's going to store, how it's going to travel. I'm going to push very strongly that we have a potato salad, and so I'm sure it'll wind itself up on the menu somewhere, and that'll be great. We're also going to do in-house kettle chips, and kettle chips we do right now for catering orders, where we make the kettle chips in-house. They're seasoned with our barbecue rubs, so they're like a barbecue kettle chip. They're going to be bagged individually, and they can be added onto any order for $2.50. They're very good, and I think that they'll be very popular. It's also a fairly high margin item for us, so we'll really be pushing sales of the kettle chips. Finally, we're going to do wine, beer, as well as obviously the bottled drinks, the natural nectars of the world, sodas, kids' drinks, things like that. Beer and single-service wine is going to be $3 per serving, and the sodas will probably be between $2 and $2.50. We're still kind of working on that metric, but it'll be right in that area. So this just kind of gives you an idea of the experience when you walk into a Southern Hospitality fast casual, the type of offering that we're going to have, and potentially, you know, you can be thinking about what you're going to have when you first come and experience it with us in July. So plans beyond 2015. You know, we've spent a lot of time researching the industry and understanding where consumers are more quickly evolving into a fast casual style of eating. It was Panera Bread actually that came out with a research report as to the fastest growing markets in fast casual, number one of which was Washington, D.C. Washington, D.C. is not a market that we're overly interested in right as of this very second, because we feel like we have an opportunity to grow in a much more constrained geographical area and create a regional brand before we step out into Washington, D.C. But at the same time, Denver is actually number 2. Phoenix, Scottsdale is number 3, San Diego and Orange County is number 4, and Dallas-Fort Worth is number 5. Dallas-Fort Worth is an interesting one. There are a lot of sort of native barbecue concepts that are currently present in Dallas and Fort Worth. You know, and so I think that we could probably enter into the balance of these other 2 markets with lower barriers to entry, as we don't have to try to overcome some kind of you know, cultural change in eating barbecue that originates from some guy up in Colorado. So, you know, we think that Phoenix and Scottsdale, as well as San Diego and Orange County, both represent very strong markets for us, and we intend to build a full-service restaurant in each one of those 2 markets as we enter those markets to make ourselves known, make a big splash. The guys in New York, the Southern Hospitality licensors, are really excited about that. They like full-service growth. They really like fast casual growth. And so we'll be growing those in conjunction with them and building out some beautiful full-service restaurants surrounded by 7 or 8 fast casual restaurants. To give you an idea of what the fast casual unit economics look like, and one of the reasons why we've been so strongly pursuing the fast casual model is it really doesn't, you don't have to go much past the net income number at these stores. We feel like this is going to be a very scalable brand, and it's going to generate unit economics that will allow us to go or take our stock ultimately where we want to go, which is, you know, my dad says $1. For me, it's well beyond $1, right? But you know, ultimately, the biggest cost savings in fast casual are primarily related to labor expense and occupancy expense. Occupancy expense as a ratio or as a percentage of revenue on a per square foot basis is actually more expensive. But you're going to go from 7,500 to 9,000 square feet in a full service restaurant to 2,500 square feet in a fast casual restaurant, and sales will not fall by that much. We're projecting sales of $1.8 million in these restaurants, which keeps occupancy expense you know, at about 4.5% or 5%, depending on where we're at in terms of base rents and CAMs, and you know, it's going to change from location to location. But we think that we're going to run a much more reasonable number in occupancy expense, which will allow us to scale sales, and ultimately, you know, you're dealing with a lot more fixed variables and fixed expenses in the fast casual concept, which, you know, makes it a little bit more scalable beyond a certain threshold of sales. It's got a much lower break-even number, which allows us to then scale more rapidly or at an increasing rate beyond that break-even number. So just simply because there are fewer variable expenses. So that's something that, you know, obviously we're very excited about. You know, labor expenses also decreasing as a percentage of sales, simply because it's more fixed, and you've got, you know, eight you know, hourly, you know, close to, you know, minimum wage. I'm not saying that, you know, it is minimum wage, but, you know, close to minimum wage employees inside the restaurant, rather than all of the fairly expensive back of the house labor that you run in a full service restaurant. So expectations for 2015 and beyond. I think that it's very reasonable to expect that we'll open 1 or 2 full-service restaurants this year, the first of which will open April 15th at Lone Tree 470 in Quebec, the second of which would open in downtown Colorado Springs at some point very late in the second quarter, or maybe more reasonably at some point during the mid-third quarter. That would be in downtown Colorado Springs, and we're currently negotiating that lease. We should know probably in the next a couple of weeks whether or not we're going to pursue that location, and that's something that we would certainly make a press release about. So you'll know in fairly short order if we're gonna do that store. But more importantly, we're going to roll out our first unit of fast casual. That's going to open in Colorado, hopefully, or not hopefully, but we'll be able to tell you for sure that it's going to open at 1000 South Colorado Boulevard in the next 48 hours or so, I would guess. That'll be our first opening, and that's likely going to open in July. Beyond that, we're also in a conversation right now with a couple of different landlords on new fast casual units, which would most likely be located in the University Village development at I-25 in North Nevada. We love that area. There's obviously 12,500 residential students adjacent to that development at the University of Colorado Springs. And there are a lot of very successful restaurants. Restaurant comps inside of University Village are very strong, and it's a place where we think that we can go do $1.8 million in revenue, which is ultimately our goal. Our focus right now is on average unit volume. If you go read through the Shake Shack filings and their S1 and get an understanding of their average unit volumes, they go into only premium locations. They put up very high unit volumes, and their unit volumes are generally in line with most of the full-service restaurants around them, but they've reduced a lot of the excess in running those restaurants from an operating standpoint. They're doing it on a much smaller platform, generally 25 to 3,500 square feet in their case, but they're doing the same average unit volumes, and it's probably one of the reasons why they were able to raise $100 million at $1 billion valuation on 64 restaurants not too long ago, 30 of which are actually just franchises. So, we think that average unit volume is really what's propelling valuation in the fast casual space. So you'll see that we're very much focused on going into only areas where we think that we can do very high average unit volume. So 2016, we'd like to make our entrance into the Scottsdale market and begin the process of brand awareness in that market, most likely with a full-service restaurant somewhere at Manning, Maine in Scottsdale. That's a process that we have not begun yet. It's something that will probably begin late in the third quarter for an opening at some point in the second quarter of 2016. But during 2016, we're going to be very focused on saturating the Denver and Colorado Springs market to the extent that we feel comfortable with the Southern Hospitality fast casual concept. We think that we'll build between 6 and 10 restaurants during the year, during 2016, in Denver and Colorado Springs, and that might include the first 1 or 2 in Phoenix and Scottsdale. It's really going to be very dependent on our ability to access what we think is sufficient and fantastic real estate, because we're not willing to open units for the sake of opening units if they don't have the traffic metrics, the population metrics, the age demographic metrics that we would require and we feel are required to open a $1.8 million restaurant. 2017 is obviously sort of speculative at this point, but if we're able to continue to move the ball down the field in the way that we have planned today, we'll open our full-service restaurant in San Diego, California in 2017 as we continue to saturate the Phoenix, Scottsdale market with fast casual, Southern Hospitality fast casual locations. And during 2017, we hope to have our best year ever in terms of unit growth. By that point, we feel that we're going to have a very solid understanding from an operational standpoint on the fast casual units, which will allow us to then very quickly scale it. We also think that by this point, the stock will probably be trading at a rate that is very accretive in terms of our ability to go out and raise capital and sell stock. It'll be very accretive to all the shareholders that are sitting in this room today. So if we could go out and raise capital at the end of 2016 at $1.25, $1.50 a share, that'll be a very accretive capital raise to all of you guys. It'll allow us to continue to grow our business in a way that capital, that paid-in capital will then become accretive to the shareholders who made that investment. We think that probably during that time we'll be raising capital from much larger institutions and accessing investment banks that'll allow us to raise that capital very quickly, which is obviously one of the biggest variables in being able to roll out that many stores, is having the cash on the balance sheet to be able to react very quickly to real estate when it becomes available. Expected financial performance. This is something that I feel very confident on. The Southern Hospitality in Denver, as well as the Southern Hospitality, Southern Kitchen in Northern Colorado Springs, will do $5.5 million this year. Those are our current units. Those units, and based on the way that they're trending in profitability, will probably do about 4% at the store level during this year, and that's based on a handful of different variables, including higher CAMs in Denver. We're still working with the landlord in Denver and sort of not quite sure that they're telling us the truth on where the CAMs have gone. So, that could influence that number a little bit as well. But we think that the new units that we're going to open this year in terms of full service will be exceedingly more profitable than the stores that we have today. And that's primarily based on the lease rates at which we're leasing the buildings. In Southern Denver at Lone Tree, we've got the lease on that building at $19.50 a square foot. That's relative to comps in the area of in excess of 35 or 40 for Brothers, as well as Lodos and some other places. So we had an opportunity to lease that space from an individual owner rather than a REIT or somebody maybe with a bigger balance sheet who could sit on it for a longer period of time without it really hurting them. So we were able to make a very good deal there. I also think that the traffic at 470 in Quebec is something that will propel that store and propel sales there. There's very high density. Obviously, I spoke to the 200,000 permanent, 300,000 daytime population, and in excess of 100,000 people traveling westbound on 470 at the Quebec exit on a daily basis, actually. So we feel very comfortable that we can do $2.75 million in sales, on which we should be able to earn 12%. I think that's conservative, and I think that's something that we can absolutely generate. Downtown Colorado Springs, I got to be a little bit careful here, but we are also leasing or in negotiations on a space at which we think that we would lease at a rate that is well below market today and very below market over the course of the next 5 years. Downtown Colorado Springs has been growing very quickly over the course of the last couple of years, and there's a lot of outside capital that's coming into downtown Colorado Springs with the City of Champions and some other projects that are taking place downtown that are driving a little bit of a younger demographic. They're driving some tax incentives for hiring downtown, and we feel that the development of downtown Colorado Springs is something that we can capitalize on today with a below market lease value. That lease will actually go further and further in the money as the city continues to develop. Southern Hospitality Fast Casual. We've got a pro forma built on our prototype store, which is actually based on South Colorado Boulevard. South Colorado Boulevard, we have every expectation in the world of doing $1.8 million in sales out of that store, which I think is also conservative relative to comps. For Chipotle, for example, during 2014, Chipotle did $2.3 million in average unit volume. A lot of people would look at me and say, well, you're not Chipotle. Chipotle's a lot better than you and all that kind of stuff. But at the same time, Chipotle has 1,400 restaurants. And to a large degree, they've begun to cannibalize a lot of their own stores. And that's hurting same-store sales, even though they continue to grow same-store sales. It's something where I think we're going to be much more of an anomaly in the space that is fast casual barbecue. And that'll allow us to do in excess of $1.8 million. But for the sake of this shareholders meeting, we're projecting revenues of $1.8 million, on which we think we can make at least 20%. Again, I think that we could probably do better than that. Chipotle made 27% last year at the store level. That's where they might have a little bit of an advantage over us in terms of purchasing power and scale of sorts. But at the same time, I think that we can be very competitive. It makes a lot of sense to invest in this space as we are generating these types of returns. We think it's going to cost us roughly $600,000 to open up a fast casual restaurant, on which if we were able to generate $1.8 million in sales and earn 20% at the store level, we'd be generating a return of close to 60%, 58.8% roughly, in return on capital. So the capital, that's a cash-on-cash return on the capital in place. We are currently engaging certain investor groups to raise capital for 49% equity in those stores. For the 49% equity capital that we would be receiving for CapEx development would allow us to continue to grow and grow unit volume by owning 51% of these fast casual stores without ever putting a dime of Bourbon Brothers or Southern Concepts Restaurant Group capital into those stores. So as a shareholder in the common stock, Southern Concepts Restaurant Group, you can expect growth on behalf of our company without really the capital and the CapEx expenses that typically go hand in hand with unit growth. On a run rate basis at the end of this year, assuming that we own, or I should say on a consolidated basis, which would report 100% ownership in the equity of all of our stores, would be $1.9 million in store level net income on $16 million in sales. That number will likely be decreased by selling 49% of South Colorado Boulevard as well as 49% of the Denver Tech Center store. We fully plan to own 100% of the University Village store. So just to kind of give you an idea of what it looks like after we've made distributions, the net income number should be closer to $1,274,000 in store level net income reported to the holding company. So very obviously excited about the growth that this year holds. I think that next year's shareholders meeting is going to be an exciting one, and look forward to going on the ride with all of you guys. And once again, just want to thank you all for coming out. Big thank you to our team that puts all of this together. I just kind of show up and it's all ready to go. So big thank you to all of you guys, and any questions, we're going to be having lunch after this, so just feel free to come find me or shoot me an email, give me a call anytime. My door's always open. It's kind of the same policy with our employees, store level, CFO, shareholders, anybody. Feel free to come grab me, and thank you all again.